Tesla finishing in the red today after taking a wild ride this week. The electric car maker down 10% after some bearish calls from Wall Street sent shares plummeting. Then some signs of life yesterday after CEO Elon Musk sent an email to employees saying it was close to hitting its production targets for the Model 3. ARK Invest CEO and big-time Tesla bull Cathie Wood was on Closing Bell earlier and says Wall Street is missing Tesla's edge.
The edge that Tesla has in batteries, they're 3 years ahead of anybody else. In artificial intelligence chips, our analyst now says 4 years of anyone else. In terms of miles of driving data collected, no one is even close. Not Waymo, not Cruise. They're at 10 billion miles, and Waymo's at 20 million miles. So you train these autonomous vehicles with data, no one else is close.
Okay, Tim, what do you think? I think doesn't she have like a $5,000 target on Tesla?
It's certainly
4,000,
for. I heard
like
rumors maybe it was going higher. I mean, look, Cathie Wood is a very thoughtful investor, and she's done a lot of work on the company. You know, my issues are I don't think that they're looking at the balance sheet. I mean, the bottom line here is the balance sheet's in distress. And you can talk all you want about where it's going to be in 5 years. I'm not sure they're going to get there. And to me, you know, we had Moody's on yesterday talking about their assessment of the company from a pure credit perspective. And doesn't sound like even a credit company is looking at their off-balance sheet liabilities, their contingent liabilities, things that are hamstringing the business now. So if you want to, you know, if you want a little whisper of fun that could happen between now and you know, the next, they might even find a way to jam in as many deliveries in the second quarter to make that number look better, but it will be at the expense of future
You don't even have to argue with anything that she said. You can agree with everything that she said. It's a debt problem that they have.
Well, the balance sheet is an inconvenient truth, as Tim says, to the bullish case.
Yeah, I mean, everything
yes,
when you sit around
X, Y, Z.
Exactly, and no one is questioning that. No one's even questioning what a genius Elon Musk is. It's a totally different page that we're looking at. That's the negativity in the stock.
Yeah, I'll just say this, that she mentioned a lot of businesses that they're very far ahead of all their competitors. I think very soon people are going to start circling, you know, the scavengers may start circling and thinking about what is the sum of the parts. You know, we know that they are ahead in AI chips. They are ahead in battery development, that sort of thing. But at some point, they're going to have to start licensing this technology, I suspect, to some of the guys who actually know how to make cars.
Yeah, and I think they're going to have to come back to the market one way or another. Debt's getting too expensive for them. They're going to have to do. They should have done before. I think we're all in agreement. They should have raised more money when they could have, which was only May 2nd. It's sort of amazing. We're only 3 weeks in, but they should raise a ton more money so they can get to where you know.
Can I tell you something? The truth is, this company should be private, right? I mean, I know that they're public here. I mean, but there's a lot of companies.
That's also an inconvenient truth.
No, I know, but it should be private, and let Elon talk to his disciples the way he wants to talk to them, and this and that, whatever. And you don't have a scorecard every day.
Get done, though.
Well, disclosures would be very different, and they actually might not be crossing the line like they have been. So, I mean, to be clear, I mean, I think this is the case where the company. The bigger issue outside of the balance sheet, or as big of an issue, though, is this demand story. I think they pulled a lot of demand forward. I think the tax credit's a big deal. I think they can't make the car that they want to make at $35,000, and therefore it's uneconomic.
If you're playing the M&A case, too, so you got a market cap of $33 billion. You're going to pay a premium to that, and you're going to assume $10 billion worth of debt? Who's going to do that?
Well, they do have cash now.
And massive other liabilities. If you're Apple, people talk about Apple being why would Apple expose themselves to all this? There's a lot of unknowns, and there's a lot of liabilities there.